I don't know what this is. I think we've all seen those movies where they get to the corpse, and just when you think this corpse is really dead, it gives one final kick. I don't know. Are we talking about gold in South Africa? The sunset industry, the narrative that has informed South Africa's mining narrative, it's just one way down to the end. And I think perhaps we're going to hear a different take. Like I said earlier, I do think if you asked me 3-4 years ago to talk about gold at $1,500 an ounce, I would have said, yeah, give me what you're taking. I want some of it. Huh? If you told us, 6 months ago, that gold's going to go up another 50% on top of what was clearly a bubble, we would have said, hey, keep talking. So I think we're going to have a fantastic conversation about something I have been known to be passionate about. So I'm going to try and shut up and let you guys have a fun conversation about the gold industry. Thank you very much.
Thanks, Barrett, and please share your wisdom with a great panel here. So we've got Richard from Sibanye-Stillwater, Benford from Goldfields, and then Billy from Bokamoso Gold. And I'm going to start with Benford. Goldfields, international gold portfolio, tier 1 assets, and you're still stuck with South Deep. Why? Why still invested in South Africa and gold, and how do you feel about the future of gold in South Africa?
Yeah, so Andries, thanks a lot for that question. And afternoon to you, and thanks a lot for creating this opportunity, so that Bennett, we can talk about this either sunset or sunrise, industry. It's dependent on the take. Perhaps let me give just a little bit of a background, particularly around the South Deep. So first and foremost, you would acknowledge that we are a global organization. We've got about 9 mines. With a footprint Australia, South Americas, Canada, as well as in Africa. And within Africa, within the South Africa, we've got this deep-seated and long-term commitment in the country, through the South Deep. All right, now, here's the interesting story of South Deep that Bernard knows extremely well. This is the asset that swapped hands various times, from Western areas to JCI and to Placer-Dome and to Barrick, and we decided to buy the controlling share of the whole South Deep from Barrick back in 2006. Why did we do that? We had full confidence in the asset, and right there is a demonstration of the confidence that we would have had, within the country, to demonstrate that the country is investable. But I think that most importantly, it can remain competitive, but only under 1 or 2 conditions. The first condition being that which the panel spoke about around the collaboration, and I'm really talking here true collaboration for the benefit of the country, or whatever the case it may be. And again, innovating. All right. So yes, you're absolutely right. Come 2013, we divested our interest. We unbundled, and we unbundled our operations, the conventional, to Sibanye, but we kept the South Deep. And as I would have said, we kept the South Deep because of this confidence that we had in that ore body. Tier 1 asset, long life. You would know that the complex would have been mined for 74 years prior to us acquiring that ore body. So it's got a long life. We still can mine that resource to between 100 Bernard. So that does not mean to me it means the sunrise. It is certainly a world-class reserve. We've never seen something like it. Especially the quality undoubtedly. We stuck with the South Deep because of the belief, and we knew that if we could turn it around, we'll be able to invest within the society and within the economy in the country for a very long time. We have committed more than 100 billion thus far, and we'll continue to be committing lots of capital to set it up for success. But I think that most importantly, to ensure that we can mine it much more reliably. So we acquired it in 2006, as I would have said, ran it at a loss until 2018. Now, obviously, a turnaround was amenable, and we had to rethink the asset. We had to rethink the organization, and to say that how can we reset it up for the success. The rest is history. Since 2019, we've actually been running this asset at a profit. And yes, gold price has increased, but I mean we've increased the output and the productivity year on year by between 9% and 17% since 2019. And in certain years, the improvement would have been far more better than that. And I meant it across the entire value chain. So we are deeply committed, all right. And in our opinion, this is equally a demonstration that the deep level gold within the country can continue to be viable.
Fantastic.
But only if there is commitment, right, and we think our assets completely differently than is the case.
Fantastic. So world-class asset, fantastic potential, long life. You've got it all. Richard, your story is a little bit different. On your side, you've got a very much diversified company. I mean, lots of different commodities. Obviously, roots in gold, but grew from there. Don't have the long life asset necessarily. What is Sibanye-Stillwater's strategy around gold in South Africa?
Thank you very much, Andries, and hello, everyone. Nice to be here. And when I was outside, I can't tell you how many people I've engaged with, take back, and everyone has basically started in gold somewhere. It's nice just to speak to colleagues of, humble
Yeah, but the
beginnings
rest of
and-
us escaped. Only the three of you are still there.
Yes, so Sibanye's got a very interesting story. So 2013, I think the story's known, Neil Froneman takes unwanted assets from goldfields with 8-year life, moribund, and here we are 12 years later, and I can't actually say that we can see a difference in the life of mine. So our strategy has been to, let's take it head on, unloved assets, and with skill set and an operating model, revive assets and deliver to expectation. And one would say, well, what does the past 2.5 years look like? We've delivered 14.5 billion EBITDA out of our gold assets, and that includes the DRD contribution. So we see incredible possibility. So we don't see a sunsetting industry. And what better point to be in today with the gold price of $4,000 an ounce? We should be able to make money out of 2.5 million or 2.2 million rand a kilogram. So we see great possibility. The old timers, the other day, someone told me we mined into an old stope that had last been mined in the 1970s. And that panel had stopped on uneconomic conditions at 8 gram a ton. We'd love that. It's cut-off grades now are 3.5. So we do see a declining grade profile. The current gold price is helping out incredibly. But in terms of where we see next, we do sort of look below, and we're not too encouraged by what we see below. Do we look above? We're very encouraged by secondary reefs, where possibly the old timers at great scale. When I started an adjacent mine, a really big mine in South Africa, 3 tons of gold a month, whereas a very big gold mine today, one of our biggest ones, is 300 kilograms a month. So at the slowest speed, we are seeing incredible possibilities where history has maybe left behind. And so we're moving into those spaces. So I think if we look at where Sibanye going next, we've got great opportunities within the current portfolio of assets. Historically on our balance sheet is maybe a rehabilitation of tailings facilities. Everyone knows our investment in DRD. We vended a lot of assets into DRD. We're blessed with a lot of water. We're blessed with permitted tailings dams. Theirs are coming together where we think, we've got another 20, 30-year business retreating tailings dams. The nice thing about a tailings dam is, the Driefontein asset, for example, you can imagine the grade sitting at the bottom of that tailings dam compared to the grades that we're placing now. And then we've got other ambitions to get into projects as well. We've got probably the most near production gold asset in the country called Burnstone, sitting out in Burnstone in Mpumalanga, and that is also a further opportunity. So I think in a nutshell, we're actually very positive about gold. It sparks a dream, and we're going to pursue that. So we're very happy to be in gold, and more especially today. 2.2 million rand a kilo. I think the stars are aligning. It hasn't always been that way. Gold has offered the opportunity for the company to diversify, and the company has done fantastically well to branch out into the PGM industry. We've had ambition to move outside of South Africa. We've purchased the Stillwater assets. We've moved into adjacencies in battery metals, recycling businesses. So I think that entrepreneurial spirit within Sibanye is, seeing new possibilities. So thanks, Andries. Appreciate
Excellent.
the question.
Billy, now I think it's fair to say that everyone in the audience know these two gold companies very well. I got a lot of questions. Well, who is Bokamoso Gold? And everyone knows you well as an individual, but certainly not the company. Can you just give us a bit of background on the company, the thinking, and what's in store?
Thanks, Andries. Good afternoon, and good afternoon to everybody. I hope you told everybody that Bokamoso Gold is the one that is most optimistic about the future of gold mining in South Africa. Right?
I told everyone, ask Billy, he's going to tell us.
No, us as Bokamoso, we believe in the future of gold in South Africa. We don't believe that gold is a sunset industry. I've worked in gold mining for 7 to 10 years before, and we believe that gold is not a sunset. We believe that there is an opportunity to look at the current assets and rethink them differently. So Bokamoso is a South African empowered business that is based here. We are actually acquiring some producing mines to build sustainable and long life operations. The idea is that we've got the resources. If you go into some of the stock exchanges and you look at people that are listing some of these resources, people would list a 3 million ounce resource. But when we look at our backyard, we've got those resources and more. So from a Bokamoso perspective, we've actually done the analysis to say, how do we capture these resources, convert them, acquire the assets, and actually make long life assets? So we're not only talking about the shade we are enjoying today for the trees that were planted years ago. We're talking about how do we also plant new trees for people that are going to sit in this room in 10 and 20 years and say, those guys were smart. They took advantage of the high gold price. So we see an elevated gold price as an opportunity, and hence for the last 18 months, we've been doing the work. As I said, we are imminently acquiring assets in this space, and we will be continuing to grow and extend those lives.
Okay, Andries, can we quickly check in with the audience about this gold price? I'm dying to know whether the only 3 gold bulls are sitting in the front here. So
shall we ask them what the gold price for?
No, they're going to say it's going up. I mean, otherwise they get fired. So I mean, I don't want to have to press that bullshit button 3 times. So please take up your thingamadingsky, this thing, QR code, and I'm asking you a simple question: gold in 18 months' time, higher or lower? 18 months, not tomorrow. Who knows what tomorrow is going to do? 18 months from now. Higher or lower? You guys don't get to vote.
Yeah. See, there are a lot of optimistic people in the room, so we go with those.
No, but wait, I haven't voted yet. Let me just also get to this.
Yeah, so it looks like a bit of a split vote. Barra. But,
Yeah, as I'm sort of, you see, I've been blocked.
yeah. So clearly the audience is sharing the optimism, or at least more than half the audience is sharing the optimism. So you've got a dream, but it's still to be implemented with lots of prospects.
It is being implemented, Andries. I think we have taken steps. So we're not just dreaming, we're actually engaging in processes to acquire some of these assets, because we do believe that the gold price environment, because it's important that we invest in this industry if we want it to continue. And I make the point about resources. If you go into the resource base of a lot of the companies, you would see the resource potential. And then you look at the reserve, right? And that's the space we play in to say, how do we maximize that conversion between reserve and resources and be committed to invest in the long term? So in the conversations that we are in and in the assets we are acquiring, that's the conversation that we are having, because we believe that gold was the bedrock of this country. And for as long as the gold price remain elevated, we need to take that advantage. Why do I believe that the gold price will remain elevated? I use a very simple thesis. I say to my friends, if you think the world will be a peaceful place, don't buy gold.
Sadly.
And I mean, and peace is something we all want, but we're living in an elevated risk environment. We've got all these elevated risk issues that we are dealing with. And if you look at the mega trends, that's one of the 5 mega trends at play now. And you may think that it's a Trump issue, but we believe it goes beyond Trump because of just the tension that has been there before Trump, that will remain to be there. But over and above that, if you look at some of the matrices, I mean, I've seen a report now where the big fund managers are starting to think about their portfolio mix, you know, moving from a typical 60-40 to a 60-20-20, where the 20% becomes gold. We know the central banks of the major countries have bought into gold over the years. We've got a big emerging world that is still under-resourced from a gold reserve perspective, you know. So you can see which camp I belong in that voting that Bernard has on. And to that degree, we've invested, we are in conversations to acquire this. So you don't really just think about it, you follow it with action to be able to create the future that has been laid by the 2 gentlemen next to me.
Excellent, thanks, Billy. Benford, and so Billy's obviously trying to invest in gold. You've got your mine, tier 1 grade asset. What are the investment opportunities that you see in that? And so if gold think about capital allocation, what are the typical things that you will invest to maximize that next 74 years or 100 years of mine resource that you have there?
Andries, I think that the answer for that question, and perhaps for Goldfields, will lie in automation and mechanization. Because the more you invest in that and you invest in the skill set, the more you'll be able to lower the costs. And if you can lower the costs, you'll be able to sustain the business for various ranges of the gold price. So this is the right time to actually do that. Richard here has spoken about mining some of the marginal reserves or ore bodies that would not have been mined previously. And that's actually what South Deep is. It's a mine in a mine. Because towards the south, we mined the ore bodies that were left by the old timers. We could not have done that sustainably today if we had not, automated and we had not, mechanized. So if we were to then, invest, it would be, on that. And increasing the whole knowledge of the ore body. And I suppose as well, setting yourself up in such a way that you'll be able to collect lots of data so the decisions that you make are decisions that can be made timelessly and that are supported by the data, right? The other thing obviously will be the investment in the skills. And when I say the investment in the skills, I don't mean investing in the skills that we know now, but investing more into skills of the future, to create a common future within the country. That is what the focus would be.
Okay, excellent. Now, it's easy for you to say when gold prices are high, cash flows is fantastic, so you've got cash to invest. Billy, on your side, though, you don't have any operating assets to build out a Sibanye or to continue living a South Deep, excellent asset. Who are the investors that are interested in investing in South African gold at the moment? And what are the selling features that you would give to attract that investment?
Yeah, no, thanks, Andries. I think we've got to understand that gold attracts certain risk-based capital, right? I have a chairman that says we attract those people that believe in God, gold, and guns, not necessarily in that order all the time. Right? So I think people understand the value of gold and what it brings. And this conversation, if you look at the gold price, in particular in rands, from 1982 to date, the gold price in rands have been going one direction. So these are the people that understand the risk that comes with investing in a cyclic commodity, because I'm young enough to see this life, but I'm also old enough to remember when Bobby Godsell was going around the world trying to stop the selling of gold at $260 an ounce. So people that understand that it's cyclic, but also that in the long-term trend, it remains on a positive. So those are the people that you bring into the picture. What an elevated gold price allows you to do is you are then able to actually invest, while some of these assets can make profitability, because the margin helps you. And to Benford's point, when you've got the high price, you can then go in and do the development, do the structural changes that you need to do to these mines to be able to continue to produce. So those are the investors that understand that I want to catch the wave, but it's not a short-term wave. I want to be part of this wave that continues into the long term, because once you have the assets, how do you restructure them? And that's part of our focus, to be able to operate at a slightly lower cost. And there are many people that have done this in different spaces. I think mechanization and automation is one element, just different approaches that you take to these assets, understanding the risk seismicity and dealing with those differently can also unlock value in these assets. So those are the levers that we are looking to unlock when we talk to our investors on this journey that we are on.
Excellent, thanks. Richard, now, even at $4,000, some of your mines are not going to last forever. You have closed shafts before, and I guess the reality is those 8 years will eventually finish, and you will have to close some of your near end-of-life mine shafts. What are the risks in closing it? And what are the lessons learned from previous closures? What can you tell the audience about the end of the life cycle, even though we're not in the sunset industry?
No, thanks, Andries. And I know from PwC, you understand risk quite well. And I can maybe just talk to the practical side of the risks we've experienced in closing shafts. And it's never nice to do that. I think it pops up in mind, and then you need to enroll others into the reality that this is going to play itself out. And how does one, communicate that sensitively? And are you right? Because sometimes we can be proven wrong. And I can promise you now, with the gold price as in there, we've shelved some plans, and these are quite difficult decisions to make. Because we live in a country where actually, with the regulator and with labour, it plays itself out in a well-known process, the CCMA, the 189 process, where the law prevents you from contemplating too much. But what you would do is attract the counterparties to come together and then contemplate and create new possibilities. Now, we've been surprised to the upside in that aspect. For example, in our Beatrix operation, the South Mine, there has been a phoenix that's risen out of the, so it's always, who's right and what do you hold in mind? And we have been surprised to the upside. So we're very careful in thinking about these aspects. But I must say, the process is well controlled. We do then operate under the auspices of the CCMA, and then in a very controlled environment. I suppose the owner is assured of being able to handle costs, and then labour is assured that the process is transparent, and then the government has also got a vested interest in long term. I must say, there's a difference between getting an operation to care and maintenance and then closing an operation. And I'll speak to one classic example on the West Wits horizon. It's about water. Now, water doesn't respect the mine boundary. Water just happens to flow, and currently the irony is, and I will take our cook operations for example, we have assets of other companies above us, and we have assets below us. But the interesting aspect, especially in a high gold price, is this inevitability of getting into a position where you pump water in perpetuity. Now, currently, that's not sustainable. So we have to share models, we have to share ownership, and I think there's a great opportunity to rethink how we go about closure. Because when these operations were first envisioned, that was never contemplated. And then to satisfy in the public domain all stakeholders that there is an inevitability where we can reduce costs down to zero, and that there's a shared understanding of the pumping of water. Because at the great irony at the moment, let's just call it like it is, under the current high gold price, there are extensions of life of mine. We're pumping, we want to close, but can we guarantee the fact that seals will hold? So in a lower risk environment, so that remains unresolved. So not collaborating, unfortunately, is a big hole into which we're going to fall. And that's inevitable, and it faces all of us. And I think the closer we get to resolving this, now we are. And again, it's a pretty predictable process. There's the collaboration between other stakeholders, the government, the DMRE, and there's a pretty logical process through which we follow to get a closure certificate. In other areas, other than water, clearly there is the expectation of labour, the local community. We've all seen what happens to the Cartonville area or the Welkom area. So it's not lost on us, our responsibility to the greater good as well. So these are difficult decisions, but it is inevitable in a finite resource that one does face closure, but in a predictable process working together with stakeholders. There's no challenge that I don't think we can overcome. If you look at water, it depends how you look at it. Is it a liability? Currently it is to us. Yeah. But henceforth, it's probably the greatest asset. So how do we collaborate and with enough stakeholders see possibilities and work together such that a lot of stakeholders who depend on that water can continue to do so?
Yeah, we're a water scarce country.
Exactly.
Water has to be an asset, absolutely.
Yeah.
Part of rehabilitation or closure looks at rehabilitation. You've got fantastic resources in your tailings dams. And those include gold and uranium. And I do want to ask a question about uranium as a byproduct. In your PGM operations, you've done phenomenally well by adding chrome circuits and get that byproduct to support revenue. Is there scope for uranium as a byproduct to support the gold industry in the long run?
Absolutely. I mean, it's not well known, but Sibanye-Stillwater's got the world's greatest uranium asset on surface in a form that's already ground down to bug dust. You only need water to agitate it. It's well known gold and uranium go together. I don't think there's a uranium play on its own, but for example, the cook dumps, if gold's a byproduct of going after the uranium, or uranium's a byproduct after going after the gold, there's great possibilities. So the question is about the uranium price. What would trigger that? So what we've learned is, you can look at the spot price and you'd be absolutely wrong. Uranium doesn't trade like that. Uranium trades on contracts, and the question is getting into that world and understanding what is the long-term prognosis. It does look like in the settling of the dust, reinterpretation of nuclear power into the future. Just look at Switzerland and Germany, an about turn. And we see great possibility to the uranium play in South Africa. We've got obviously Joburg and Indaba going. We believe there is talk that this possibly is an opportunity to extend. We've got a resource right on our doorstep. It is expensive, but there's every opportunity that gets turned to account, and that's the Sibanye way. They say, it's in our DNA to look at those opportunities, and that's one opportunity that's at hand. And given the right circumstances, I think that's a go. At the moment, I think we've got better prospects, but man, who knows?
Capital allocation decisions. There we go.
Yeah.
And our time's up. So before Bernard asks, I just want to, because Bernard, cheeky question, 18 months out, so you can't hold anyone accountable in 12 months when we're all here again. But what is your average gold price for 26 calendar year? Billy, if I can start there.
Average, you say? Yeah, I think we're in the sort of $4,500 to $5,000 range.
Thanks. Benford?
Look, I'm not going to give you the the price, but I want to say with certainty, it is likely to go up in the next 18 months, and perhaps outside the 18 months window, maybe 2 to 3 years, but it will be volatile.
Okay. Richard, next
So I'm
year.
going to give you a number that I know I'll be wrong. So $4,714. That's so much better.
Okay, thank you very much. Billy, first question is, as the new kid on the block, what is Bokamoso Gold's vision for the South African gold industry? Are we going to see new entrepreneurial innovation like we saw with Sibanye?
I think we've stated that we truly believe in the future of this industry. We believe that there are resources to make this industry a sunrise industry instead of a sunset industry. So we believe that the future is here for long life assets in the gold space. What it will take, as I mentioned, is that risk-based capital to invest in these assets. It will take innovation to rethink these assets to be able to take them to the next level. And it will take partnerships. I think we'll have to work together as a country, as communities, as investors, as operators of these assets to make sure that this future is there that we're talking about. I mean, we believe in so much in the future, it's in our name, right? If you look at Bokamoso Gold, Bokamoso stands for creating a new future, so for tomorrow, for the next day. So we believe in this future, Bernard.
Benford, there's a question here that, if you don't mind, I want to put to you. With the gold price this high, what can be done while the sun shines in terms of communities, employees, shareholders, and growth? So yes, Windfall profitability, fantastic. Every mine's making money. What are the sort of once-off things one can do with this sort of money?
I think community investments, Bernard, should be more of a sustained, investment and not necessarily, the once-off. So yes, you are absolutely, right to say that with, the Windfall, you can invest, much more within the society. But when you invest in the society, you have to ensure that you invest, sustainably, so that you create these, sustainable, communities and, let's call it secondary, businesses. At this point in time, we are heavily invested in the supplier and enterprise development within the shadow of the, the shafts, and we'll continue to, actually do that. And as I would have said in my, previous, answers, focus on the skills.
Yeah.
So that those skills,
point,
can not only be for the country, but you could be able to export them as well.
But now, I mean, the South Deep has been under construction for 15 years, 20 years. This Windfall profitability, you don't have a backlog in capital. You are finally getting to the point where the capital is committed, has been spent, the mine is up and running. So South Deep is not like, thank God, we can afford to do our capital. It's not the South Deep. South Deep's capitalized, is it?
Absolutely.
Yeah. No, I'm asking because this is one of these stories that has been around. I once bought shares in my previous corporate life. So that's how long ago that was. So the Windfall profitability truly will flow up, obviously, back to goldfields for redeployment. And then, as you say, you can invest in the future of communities' skills.
Absolutely.
Okay. So I want to quickly quote somebody I follow on Twitter. I know it's called by another name, but I don't know what that name is. So this dude says, if you had told me 13 years ago that an ounce of this stuff would sell for $4,000, I'd have said, there must be riots in the street. The National Guard must be deployed in big US cities. Maybe there's a war in the Middle East or somewhere. There's higher inflation. There's economic uncertainty. It's amazing how the world creeps up on you, and then the gold tells you, if 13 years ago you predicted 4,000, people would have said there's a calamity. Perhaps the calamity have crept up on us so slowly that we lost sight of it. So that makes me quite bullish on gold. Evie Hambro, which we've had at our conferences, is Mr. BlackRock. He's big in your lives. You may not know that. But, call him sir when you see him. He after the Denver Gold Conference, he summarized the gold mining industry through his colleagues' eyes. And I want to go to you, perhaps, Richard, with the question. He says that profit margins have risen very quickly. They spoke to 35 gold mining companies, and I'm sure all of yours were represented there, which means very few of the 35 companies have made plans yet to spend the money. Is that true? Is that where you are? Are you like, geez, so much money?
Yeah. No, look, I think, it all comes on what's the price we're going to get for laying plans. And I think gold has been so consistent for many years that the faces that we've opened up and are mining don't reflect gold of today, but they reflect gold how we viewed it 3 years ago, because it's taken so long to get there. So the undergrounds don't change so rapidly. So the fact that we've got high gold price, that needs to bed down into a forecast of consistency that we can reliably, on the back of our shareholders, be responsible and say, okay, let's go, launch the boats, we're going to invest the money to get into position at that time. Yes, there will be opportunities where some panels have stopped on low grade, we'll resurrect those, but the greater opportunity is getting into position, and that takes capital, that takes investment. So that is the great dilemma, and a lot of companies have come unstuck. If this is a blow off top, you're out of position. So it really, and how would you do it? It's head, heart, and gut. Somewhere along the line, you've got to choose.
Benford, another conclusion that Evie Hambro came to was gold miners have barely increased their reserve price assumptions. Now, there's this trailing gold price that feeds into the reserves. Would that be true for South Deep? Are you guys, living by the reserve you've declared on a gold price of probably 1,700, 1,500? Is that still true, or are you going to adjust your gold price?
No, we don't. You would adjust. But you would be very measured in terms of what it is that you are mining. Because if you go into the marginals, at the scale of South Deep, you'd require more volumes, and you do not necessarily want to put the organization as well as the infrastructure under any unnecessary and undue pressures. So you'd really be measured in how you revising, and do that within the right parameters to remain very true to yourself. But most importantly, to the markets.
Billy, what is your views in terms of fundraising? Is there appetite, both debt and equity? And who is funding South Africa? Who is funding, South African funders or international funding? Sorry, you get the drift of the question. I didn't read it well, but
we were pleasantly surprised when we started doing this work about 2 years ago that there is strong appetite for this class of assets. I think people see the thesis around this elevated risk and an elevated gold price, at least for the next 2 to 5 years. And therefore, when you talk to the commercial banks, when you talk to some institution and some private capital, there are areas where there is that sort of interest, and we are exploiting and we are engaging with that type of capital to be able to bring it into the market, because you also have got, you know, a divergence whereby you've got the gold companies have become too expensive now. You know, if you look at Gold Fields and you look at their valuation, Benford is smiling because they've gone quite high. So people are also looking for an entry whereby they can also go with the wave moving forward. So we're finding that there is strong appetite, Bernard, in the space, both public and even in the private space, including family offices.
Thank you. So you've got a big dream and you believe there are funders out there.
We know there are funders out there, Bernard.
Final question, briefly, perhaps, just Richard. Mining always gets the investment cycle wrong. What are the capital investment plans in South Africa? So let's not make this Sibanye, but you can. But what should South Africa's gold mining industry be doing now? So let's say we don't want to get the cycle wrong again.
No. I don't think you want to run out of cash now. I mean, is it cyclical? Are there opportunities ahead? No one wants to buy at the top.
Yeah.
You know, are we at the top? Sibanye's done very well timing the market. And we're very fortunate being in the position now where, you know, both PGM and gold is running at the moment. So, you know, we probably tied over the down cycle, you know, debt to repay. So it depends on your balance sheet, depends on your setup, but, you know, I think there's a lot of relief at the moment. So I think you want to set yourself up. So I think at the moment, what is Sibanye's prospects going forward? So I think the fact that the metal prices are where they are allows us to, you know, take a breath and really knuckle down and focus on delivery. That's what we want to do.
So I have to ask you one unfair question. So when are you taking Burnstone to your board, and will they approve it?
No, I mean, currently, that's not because of now. So we unfortunately did put place Burnstone on care and maintenance. So we are looking at the feasibility study in two aspects. We're looking at the capital register, and we're looking at the schedule to ramp up. And when those sums are done, and that looks quite attractive, the big question is at what gold price? Yeah. And then there's a return. It will then fit into the schedule of other projects, and then we'll take it to the board.
I don't know about the rest of the room, but there was a lot of hot air being generated here amongst these gold bulls. So this side of the room is very, very hot. Please don't go, but ladies and gentlemen, join me in thanking the gold bulls, the people who believe.
Thank you, Andries.
Welcome. Thank you.
Thank you.
Thank you, guys.
The thing I wanted to do before lunch, but
Thanks,
then it wasn't
Benford.
rigged up,
Thank you, Andries.
was I wanted to share with you something I've really been passionate about for 13 years. And Paula finally said to me, you know what, just do it. I've always wanted to take these conversations to a place where they don't die. At the end of so many of these conversations, I go like, wow, that was profound, that was deep. I wish I had access to that, you know, when I was younger. And I've toyed around with many ideas, and we've just for the moment gone a very, very simple route. So with this zero bullshit approach of ours, we're just going to take these blunt conversations and make them available on a platform. So please watch 60 seconds of video. Then I'm going to show you how to access that. And then you see if you want to use it or not. So can we play the video for 60 seconds, please? I'm holding my breath. Mining's biggest conversations shouldn't disappear after the conference. Scan,
subscribe, and explore.
Thank you. So over the years, I've learned to never overestimate a mining audience intelligence. So on your lanyard, there's a little tag. Now, do that. It's very difficult. If you've got a phone, if your phone doesn't respond, get a new phone. Okay, then you are really. What should happen is you should actually get the link through to the YouTube channel. And once you've done it once, obviously, you can do it easily in future. So that gives you access, and then you can do the rest. So that's the scan, and then you can subscribe, and then you can follow. Now, you'll see the usability will enhance over time. You will see that by perhaps tonight, Duncan's conversation will be on there, and you will just have access. Now, you'll use it the way you see fit. My dreamers use it like David Mackay, who goes back to the conversation in London and say, but when Bernard spoke with John Thornton, it was obvious that Mark Bristow was going to get fired or something to that effect. You use it the way you see fit. I've had an absolute obsession that these conversations are more than just the moment. And so let us know how you use it. Use it as you see fit. We did London and Coal Day. We'll go back in time as we catch up. Obviously, we'll first do this one. So in 2 or 3 or 4 days, by the end of the weekend, all of these conversations will be available in a slightly more useful form. So sorry for indulging or forcing you to indulge me in my passion, but let's use this, and then it's a platform that may actually serve the industry beyond just the conversation. Paula and team, thank you very much for creating the content with which I can proudly then continue to mine it. Why don't we go and drink coffee? Thank you very much. Thank you.